Good to go. All right. Well, good afternoon. Again, welcome to the Big Iron Farm Show, the 40th annual Big Iron Farm Show. I'm Don Wick with the Red River Farm Network. Must be the year for anniversaries. It's our 25th anniversary here at the Red River Farm Network, and we're proud to be with you here once again at Big Iron. Again, we have our online audience as well as our crew here at Big Iron, and we invite you to stay with us throughout the hour today, and again, more seminars tomorrow on the third and final day of Big Iron. We're talking about the new normal. I think that's become part of our vernacular now in this era of COVID-19. The new normal, what's next in the land market. And our guests, Kyle Nelson, Dale Weston, and Nick Watson from Farmers National Company. And let's just talk about it. This pandemic, it seems like it's impacted all of our lives. Kyle, how has it impacted the land market, or has it, the ag market?
So far, we haven't seen it. We thought it might be. I mean, for the last several years, we've sat up here and basically said the market seems to be steady. There's a variety of reasons behind that. But so far this year, I would say late summer, early fall, there's been some very strong land sales around, and we're kind of anticipating seeing that going forward.
You're starting to see some sales at this point?
Yeah, I mean, there's been here and there's been some sales, some public sales, some auctions. We've had some, and you know, they've been, I'd say, average to excellent land, and that's probably where we're going to see it. We have seen through the last several years land that's maybe below average. Many times the gap between the two is widening, and just in this last summer I've done appraisal work in South Dakota and southern Minnesota, and you talk to people, and it's the same everywhere. You know, I know the answer before I even ask it to the locals. So the reasons for that, with COVID going on and the disaster of a harvest last year, crop insurance, I think, is a lot better than it used to be, and that helps fill the gap. And then, of course, the disaster payments, I think, is a big reason why.
Well, we've seen that land market stay rather stable here over the recent number of years, it seems, when we have these conversations. Dale, when you look at what's going on, are there things changing? What's happening in the land market itself?
You know, it seems like year after year we keep saying the land market's average or staying stable, and the reality is it really has, like we said, for higher quality land. But I think there's different aspects of the economy that have played into that stability. This year we see a lot of ad hoc or government payments coming out that fill the gap between the production agriculture and the income coming in from that. In 2016, 17, 18, we saw some pretty large crops in the area, and that large yield kind of offset the low commodity price, so we filled the gap there. So that's what's kind of keeping the stability, and people say it's kind of boring to see land values at the same levels, but I think it's different reasons why those values are staying strong. And what's interesting about that, Don, is that not every area has that big crop on a certain year, or has the yield on their prevent plant insurance or their revenue assurance policy to make that gap filled. So you are going to see pockets here and there where land prices just are weaker than you thought they would be.
So when you say high quality land, what exactly are guys looking for?
Good drainage. We talk about productivity indexes. Certainly investors probably pay attention to those more because it's simple and they can understand it. They're not always the best of indicators sometimes, but good access, especially in the Red River Valley, access. If you're going sugar beets, you don't want to be stuck in the mud with your trucks. Uniform field patterns, because if you've got diagonal field patterns going around sloughs, which is inevitable in prairie pothole region, but I mean, you're just the waste of inputs and overlapping, guys want to avoid that, especially in the Red River Valley when there's, most land is square and uniform for the most part.
We've seen the explosion of technology, I think, in this COVID world. We're all doing Zoom calls, and we're all connected one way or another through technology, it seems like. Have you seen the technology change? I'm guessing the way land is sold. Are there more online sales happening?
Definitely have seen more online auctions in the last 6 months for sure, but in the last 2 years, that's one method of sale that's really become more popular. You know, we've done a lot of live chant auctions. We do online auctions. We do conventional listings, one-time bid sales. But what I see as the benefit of an online auction is that maybe the neighbor down the road doesn't have to sit in a chair with his other neighbor sitting 10 feet away from him and bid at a sale. He can sit behind his computer and hit the button and bid. You know, sooner or later, obviously, when the deed comes out, we know who bought the land. But that particular method really seems to be more popular, and I think it's with our younger generation too.
I've been doing this for 20 years, and 20 years ago in this area, a farmland auction was a rarity. It was listed for a price, or there was some kind of bid session that pared down the buyers a little bit. And then, of course, when we had the boom in 12, 13, and we saw the auctions, and they worked well because none of us knew what the value was. I mean, we'd think it was here, and it blew right by it. So, but now we're back to a period where, you know, there's a more limited amount of buyers. So sometimes that online auction is a more convenient platform. And as buyers get used to it, I generally find out that they prefer it.
So you see a trend that's going to continue?
I think so. I mean, it's one of the tools in the toolbox, as we say. It depends on the kind of land. Certainly, you get east of here, and there's more of an Amish presence that are buyers. Well, they're not going to be using a computer, so that might force you to have an online or a in-person auction. I know there was one late this summer that was exactly the case. But yeah, I think the technology will trend that way. But you know, we've been seeing things change so fast, we might not even comprehend the next thing that's down the road a year or two down the road. So we always have to be open and willing to change and adapt.
Yeah, I think
Two things that I see, Don, with the online auction. You know, if your buyer wants to be at their home in Arizona, he can sit behind the computer and bid. He doesn't have to worry about being at a physical location to bid. Granted, most auctioneers, and we would too, help with making that work if they wanted it to. But the second thing with the online auction, the way we do it, is we open it up on a particular day, say a Monday, and then it closes on a Wednesday. Well, you know, if you forget that auction's on a specific day at a live auction, you've missed it. Whereas here you've got 2 or 3 days to say, oh yeah, I'm going to jump on and do some bidding.
You talk land, Nick. You're involved on some of the stocks, like Crystal Stock, or what we do with some of like the ethanol co-ops. I'm curious on the Crystal stuff or on the sugar beet stock. Have we started seeing any of that activity yet, or are we too far on the front side?
Well, we have seen some actually. We had our first sale a couple weeks ago. We sold 25 shares at $39.50, which is an extremely strong price. Last spring, I think we ended at $33.75. So there's a lot of optimism out there for.
What do you attribute that to?
I would attribute it to just, like I said, the optimism that there's going to be a good payment this year. There's a really good crop out there right now, so that's probably the two main things.
So we've had a lot of PP ground, obviously. How does that play into when we're looking at not only land sales, but rental ground as well?
Well, so far, you know, I was in crop insurance 20-some years ago, and basically all you had to do was go in there and be able to work it up at some time in the summer. And I had a few farms where there was a stray quarter that they never planted it, you know, and they collected PP on it every year. But those have been tightened up now, so I can't remember the exact dates, but you can't continue to PP something in perpetuity. So if a wet cycle continues, you know, it's going to affect the rentability of some of that ground, especially if, you know, they can't get in there. So, you know, so far, you know, I haven't seen it influence things a ton, but the potential is there.
Has there been, you talked about the land market being holding up, rental rates as well?
You know, what we've seen in rental rates is that they've been incredibly strong. You know, there's a numerous amount of operators that want to expand their operation, you know, get those crop input expenses spread over more acres. And so whenever we do have land come for rent, and we typically don't have a lot, we usually have a lot of long-term tenants that we deal with, but when we offer it out for public rent, we get a lot of interest on it. So we still have a really strong demand for it, which demand pushes price. And so the rental rates have been very good, very strong.
I think talking to some of our other farm managers, I think maybe this year more than others, there's a little bit more pressure from the operator, the tenant, that it should go down, but then there's the realization that the neighbor down the road will probably pick it up for that because of the ad hoc payments, crop insurance have all kind of stabilized things. And as far as crop insurance goes, that's what it was designed to do. So far, that seems to be working, but you know, the ad hoc payments obviously can't continue forever either. So.
Right. You look at real estate, we always talk location, location, location. Are there some locations, some geographies that land prices are faring better than others? Are there differences?
Well, there's always hot spots, you know, in our general area of, say, Cass County, the Red River Valley, up north and south tends to be some of the more productive land, brings some of the more stronger sales prices in the region. But, you know, you get into some of the areas outside of the valley, into the prairie pothole region, even western Cass County is out of the valley, getting that Buffalo, Tower City area, and it's amazing. Kyle and I are also farmland appraisers, and we've been doing some work out in that area. I've got sales out in that Buffalo area of Cass County that are higher than Red River Valley land south of Fargo and Moorhead that produce sugar beets. You know, we just talk about hot areas. If you have an area where they can raise good corn, because corn has been the game changer in those prairie pothole areas. You know, rattling off 175 to 200 bushel corn really, you know, helps the economy for land sales. So, yeah, there's areas in the state, you know, and I think anywhere south of I-94, and I like Lemoore, Dickey County, Ransom County, Sargent County, where they've been able to raise these big bushel corn crops, has really pushed the land values down in those areas.
So who's the buyer of that land?
What's that?
Who's the buyer when we're looking at selling that good farm ground?
I mean, we still see farmers driving the price, for the most part. The farmer, typically, they have emotion involved. An investor generally does not. So we talk about it all the time. You can't put a price tag or value, motivation, and that sort of thing. So the investors are a player, especially in certain pockets. You get in your radius around Fargo, there's a perception of, you know, that it's better, or it's, you know, maybe we'll develop, you know, 50 years down the road. But I mean, it's still, we see farmers driving it by and large.
But we look at that land that's buttoned up to ours, and we've been looking at it all these years. It doesn't come up for sale very often. You have that opportunity, you have to take it sometimes.
No, and I think that's exactly right. And I think in the last few years, when things have stabilized and budgets are tight, I think the buyers are more long-term in their thinking. That's why they're paying what they're paying, as opposed to 2012, 13, where they just, had to spend money. All types of land went up in value. So, and then just in the last decade, with generally good agriculture, economics, there's been a lot more younger generation interested in farming, and they're going to be involved in the farm. So that always, motivates them. They've got 30 years or whatever it is to pay for that land. So that always helps.
When you look at a piece of ground and there's a tenant on it, if they have first option to buy or right of first refusal, those kind of things? Is that something you see or should we be seeing?
We do see it. From my experience over being in this business this is my 27th year, that right of first refusal or first option to buy really, if you're a seller, hurts you, to be very honest with you. We go to an auction or we go to a bid sale, and the bidders are less apt to want to bid on land that they aren't quite sure is going to be sold to them if they are the high bidder, because they know that there's this refusal or option on it. I can understand completely why an operator who's operated it for many years wants that, but I have to look at who I'm working for, and I'm working for the seller, and typically a right of refusal or a first option to purchase is going to hurt your land sale.
A number of years ago, I was talking to a farmer who would have been a player in buying in a certain area, and there had been a piece that had been kind of offered around by an agent, and didn't mention there was a first right of refusal on it. And this operator said, well, I never would have even wasted my time if I'd have known that. So that's kind of goes to the point. I mean, it seems like not a bad thing on the outset, but people don't want to be used to set the price for somebody else is basically what it comes down to.
What's the best way to determine the value of that land?
Well, as appraisers, I mean, the crux is comparable sales in the area. I mean, you certainly look at the productivity ratings, but more specifically the specific soils, because those productivity ratings are really an oversimplification in this region. In North Dakota, they're based strictly on wheat. South Dakota, the eastern part of South Dakota, it's corn. Minnesota, it's corn. And then we look at drainage, access, all those sorts of things, and location, neighborhood. I mean, it's just a reality. Some areas are more competitive than others, and that's a factor too. And who are the buyers in that area? We've gone through periods in the Red River Valley where it's been investors. And there was a period, I don't know, in the mid-2000s, before the crash in 2008, we had a saying in the office, if it's flat and it's black, it's worth this. I know this is worth more than this, but that's not what the buyers are recognizing. So that's our job as appraisers, is to recognize that, and that's ideally where we add value in that process.
I look at my tax statement, it gives me the land value. How does that play into the discussion?
In North Dakota, we have a true and full value on our tax statement. And I'm here to tell you that isn't your true and full value on your land. I hope no one ever sells their farmland for that value. That's an arbitrary number that's utilized for tax purposes for each county to figure out what your taxable value should be on the land. Minnesota actually has an estimated market value, which, depending on the county that we're in, they can be more similar to what land's sales have been, but you have to look. They're using a whole broad county, not particular areas. So you got to make sure that you know what the land is selling for in your area. But in North Dakota, the tax statements really don't have any bearing on what the value of your land is.
I was just appraising a property about 50, 60 miles northeast here, just outside the Red River Valley, and it was 240 acres and probably only 60% cropland and 40% woods. So you could see that the assessor had basically taken, well, farmland sales in this area are this, well, there's some wooded sales, theirs are this, basically added them together. You could just see that. So, which isn't usually how it works, because a mixed property, a farmer buying that, well, those woods don't do anything for me. I'm not going to pay anything for them. So in that case, I appraised it for less than the estimated market value. So the assessor's not going to probably take into account for some of those issues that we look at.
Hal, you mentioned drainage earlier, and the tile guys seem like they're busy every year, but pull that weed off and we're going right at it in putting tile lines in, those kind of things. So from a landowner perspective, should that be something that they consider if they've got rental ground?
It's something to consider in this area. For one thing, we don't have evidence that it adds the value of the cost of the tiles, which is okay for the producer because he's making that up in production and whatever. But for the landowner, if they're just straight out paying for the tile, and I'm talking pattern tile, which is what, 800 to 1,000 bucks an acre, that might not make sense doing it that simple. Now, there's all kinds of creative ways that we get approached about, the landowner pays for the tile, the tenant installs it, and, there's an adjustment in rent. That's a possibility, but it's still a relatively new thing here. And of course, with being flat, everything's pattern tiled, so that the cost is higher than if you go to areas outside of the valley and in southern Minnesota where there's slope and very rarely is a pattern tile. There's tile along drainage areas and low-lying areas and whatnot. And as you go farther south, from what I see, you clearly see it translate to value, and even much more so than the cost that tile would have been. So we're in a unique area in this location. It just depends on the landowner's goals. They better be long-term if they're going to do it. And with that, I want to say I'm an advocate of drain tile, but it just, we work for the landowner, and, it's probably not an immediate payoff at this time.
You talked about being creative. Do you guys have a role in that process to kind of help maneuver and give some ideas, perhaps?
We do a lot of consultation work, actually, our company, where we can be hired on an hourly or a per job basis to meet with a absentee landowner and say, go through maybe their farm lease to see if their current farm lease is adequate and doing the job that it should for what they want. But yet on something like drain tile, we can go through and figure out the costs of it. One of the things that we talk about with drain tile with absentee landowners, because a lot of the ones that we work with are elderly. So if you've got a 60 or 70-year-old person that, maybe the return on that drain tile takes 15 or 20 years, it may not make sense, and for some it may increase the value of the land. But again, if you've got someone that never wants to sell that land in their lifetime, the increased value isn't important to them as much as the production to the farmer. So, it's a matter of meeting with that landlord and their tenant and seeing what each of their goals is and trying to make it as win-win as we can, but remembering that, this landowner's got an asset that, we need to advise them the best way to utilize it and maximize the production and the income from it. But we do a lot of consultation work, and that keeps us busy throughout the year because people will come in and visit with us during the winter months about maybe a project during the next summer.
I look at those absentee landowners. I'm guessing they're more and more removed from the farm each generation. Walk me through that process, and when you're working with an absentee landowner that really doesn't have that working knowledge of the ground.
I take it for granted that if you own land, you know something about it. And actually, I'm selling a piece of land that I've managed now for 27 years. And the landowner passed away last year. She had never stepped foot on that land in her life. She knew generally where it was in the state of North Dakota, but she was never on it. So I had to, every year, it was an education process of, as basic as how a seed or a plant grows, to fertilizing it, to the cost that the operator has. And it's a fun experience when you can convey that. But now you're right, Don, that land just went to another generation who's never going to see it. And like I said, they've decided to sell it. And I think that's what we're seeing right now is this great turnover in land. Because a lot of our landowners, maybe their parents or possibly themselves grew up on the land. But now the next generation is really removed. And that cash seems like a lot better deal than the cash rent that they can get off of it, especially if they're splitting it up 4, 5, 6 different ways.
So you talked about some land sales happening. Is there a time of the year that's better to be selling land?
Historically, from now to April is the traditional time you sell it. I would say the best time to sell is the day after the market goes up 20% or something. We
So
saw the
missed it
inverse.
today,
Hey.
right? Because soybeans are up.
Yeah, I saw
Yeah.
soybeans are up 15 or 20 today. So the inverse happened, I think, in 2008. You know, when the stock market crashed, we saw boom, $500 go off the value of land in the Red River Valley at that time. But you know, and technology has changed with the online auctions. I mean, we sell land all through the year. But you know, now is a typical time. You know, I deal with some clients. You know, you kind of want to cherry pick the date, whether it's the day after the BEAT payment comes out or the day after the presidential election. Who knows? I mean, you don't know till after the fact. You know, but
I think
that's-
one of the things that's really important for a landowner thinking about selling is that a lot of them have cash rent leases that maybe go up until December, end of the calendar year. And that's when they think about it. But really, now is the time to be talking to your tenant about possibly selling your land and maybe utilizing a professional. But before they go out and put inputs on for the next year, assuming that they're going to farm it, let them know that you're going to be selling that land so that you don't have that to deal with. Maybe fertilizer, chemicals have been applied to that land that maybe shouldn't have been. So my advice to a landowner is, even in the summertime, if you think you won't sell it until the fall, come in and see us.
every once in a while we come across a verbal lease. And you have to remember, I think the date is September 1st
Yes.
in North Dakota. If it's a verbal lease, it's renewed, if nothing is done. So that's something to keep in mind too.
I didn't realize that. When we certainly have had some challenging times in agriculture. Is the lender involved? Are we seeing for sales or anything of that sort?
We haven't seen the forced sales yet. But, you know, we've had sales in the past years where the operator has wanted to maybe take care of some long-term debt, but then lease back the property. And we've seen some more of that happening. As far as the forced sales, I haven't seen it yet, but typically those tend to be later in the season, maybe in February, March, even up to April. A lot of times, you know, that conversation between the lender and the operator, if that situation is going to happen, isn't something that they rush in to talk about, so it usually happens a little later in the selling season.
Each of the last few years, we've kind of thought we'd see a flurry of them, but it's just kind of a steady trickle. They're here and there. Most of them kind of get handled behind the scenes, perhaps, but you know, no, it's. We thought after last year, you know, a lot of the harvest, we kind of got through the grapevine, you hear that, well, maybe a lot of landers were not doing anything along those lines because you had standing crop out there and you run on all kinds of problems and potential issues with that. But we're not catching wind of it now, you know, so we'll see.
You know, COVID, obviously we've got less road miles happening. People are working from home. Nick, I'm curious, when you look at the stock on those ethanol plants, they've had their struggles, obviously. What's happening in that marketplace?
You know, the ethanol plants that we trade throughout the Midwest, the prices, the value of the shares have gone down quite a bit, as the margins for the ethanol plants have as well. So we have seen an uptick in the last month on a few ethanol plants that are starting to come back. So there is a little bit of optimism there that we can, but for the most part, all the ethanol shares are way down.
So are we seeing some recovery there? Are most of those plants back in operation?
All of the plants that we trade are. There are some that are still shuttered or maybe trying to look at other avenues, but right now, the majority of them are producing ethanol, just not at the rates they were
At the
before.
capacity that they would have generally.
Correct.
You know, we're in a low interest environment, have been for some time, and the way the Fed talks, it looks like we will be for some time to come. What influence has that had in this land market?
You know what, we've seen it in the past, especially with Farm Service Agency had the beginning farmer loans that were at low interest rates. And we saw that really push a lot of land sales where the younger buyers were out there. I believe, you know, with the lower interest rates now, we'll see more of the other buyers come in as well because they can lock in a long-term interest rate and spread that over a lot of years, and that typically is very positive for sellers to push up the values of land.
We have seen Wall Street's been pretty strong. Does that take that investor dollar away from the land market?
You know, it seems like land is that security blanket for people. It's almost like the Wall Street people who are getting out of stocks and going into bonds. The buyers of farmland typically know farmland, and they like it. They accept the rate of return they're going to get on it, and it's just kind of, like I said, a security blanket, a comfort level. You know, some people rush to fixed income, some people buy silver and gold, and some people buy farmland. So I think we'll see a strong market for investor buyers as well as farmer buyers this fall.
Have you seen any change in the dynamics in the recreational land?
I think I probably deal with it a little more. It's just a gradual uptick. What brings the big money is wooded deer hunting land. I would say waterfowl and pheasant. I mean, there's a market for that out west, but it's usually income producing. The deer hunting land, a lot of times, there's really little or no income off it. Nothing major happening there. And of course, the size of the tract is what matters. I mean, a 40 is going to sell more per acre than an 80, and really get more than that, and you don't see a lot of sales. Sometimes you'll see a quarter, but nothing too dramatic happening there. It's kind of steady, but you know, maybe a slight uptick.
With Farmers National, you obviously have a national footprint. Tell me about the services you guys provide.
You know, in this area primarily, you know, the backbone of the company, which has been 90 years now, you know, has been farm management, managing farms for absentee landowners, and you know, offshoot of that is the real estate sales, and you know, appraisals in this area are the big ones. We do have oil and gas, which in western North Dakota is obviously a big factor. And there's some other, well, the co-op stock, I can't forget about that. That's been a major thing for a number of years. So those are the main business models.
So what kind of questions are you getting here at the show? Obviously, people just want to always talk about value, I'm guessing.
The questions I've had being in the booth this week is land values. You know, there's a concern over, there's a lot of negative press or news about agriculture. Lower commodity prices, although the last few weeks have been pretty good. You know, the income level of a producer has remained fairly stable the last couple of years, but that source of income, I think I saw statistics that, Don, maybe you could tell me 30 to 35% now is ad hoc government payment now, where in the super cycle we were down to what, 10, 12%. So that's a little bit scary as to where the income is coming from. So, you know, there's some absentee landowners that are maybe looking at selling this year because they're just kind of concerned about the news they're hearing about, you know, the way the farm economy is going. So that's a lot of the questions I'm getting from the producer, farmer side is just, you know, where are the land values going? Are they ever going to go down so I can buy some more? That's a question I get a lot. So.
You get the comment, well, that doesn't cash flow. Well, if it cash flows, I think we're all in trouble, to be honest with you. So then everyone would buy it, and you know, it doesn't work that way. You got to count on appreciation and time and whatnot. That's just the way it traditionally works.
So as we get ready to wrap up, any take-home message for folks? Any things that folks should know when we start looking at working with you guys or looking at this land market?
You know, I just think that we're the type of company that we take every land sale as a very serious issue because it's a one-time offer in your life. You've got this asset to sell, and we want to make sure that you get top dollar for it and you're taken care of the way you should be. So we really want to get to know you as a person and what you need and what you expect from your land sale. You know, as far as the appraisal side of it, we've been incredibly busy with estate work, with gifting work, with ag lending work. So just really appreciate our clientele that continue to come back to us I'd say Kyle and I this year are going to probably do well over 200 appraisals in our office.
We started this conversation about the new normal. What's our new normal as we go forward?
Well, the first thing, and I've been thinking about this, is commodity prices. I did a little quick research, and about 9 out of the last 13 years, we've had marketing opportunities. I'll use corn, for example, between $3 and $3.50, which is where we're at today. So we keep hearing depressed commodity prices, and I think after 5, 6, 7 years, it's time to accept that that's where we're at. But certainly expect the unexpected. Obviously, that's what's happened this year. And technology just seems to affect things at a more accelerated rate, obviously in agriculture itself, but also in our line of work with the type of sale we have. The online auction is an example of that. The different technology that can be used to analyze the quality of land. Those are the things that come to mind for me for the new normal.
Well, folks oftentimes want to have that one-on-one conversation, whether it's here at the show, or if they want to catch up with you online or on the phone or those kind of things. You're always available for those kind of conversations.
Absolutely. Exhibition Hall in the northwest part of the grounds, and farmersnational.com. Contact us, and you'll track us
Go
down.
from there.
Yep.
Good deal. Good to have you guys. Kyle Nelson, Dale Weston, and Nick Watson with us from Farmers National Company. We have a question here, sir.
You're talking Minnesota? All of our counties appraise on like I said, a county-wide basis. So yeah, they do go off of sales in the area. Do they go into the specific soil types and the quality of drainage and production capabilities? No, they don't. So they have to be fairly broad. So if all of a sudden you had a huge sale, maybe it was 2 or 3 townships away, they're going to bring that in and utilize it. So yeah, you could see your value go up that much.
And sometimes, go ahead.
Did your land go up that much? I don't know. Yeah.
Sometimes you see where you can just tell they're doing township by township. So obviously you can have section 13 on the east side of a township, and right across the road is another township. Every assessor in county is probably going to be different in the reality.
A little bit, yeah.
Just like anything, there's some better than others. And, it can depend on the pool of data too. No. In fact, they usually don't even know about it. His tile, there's no record of that in the courthouse. So that's the thing with tile. And of course, in irrigation in North Dakota, irrigated ground, it's going to be based on soil type, and a lot of the irrigated ground is sand. Not very productive, so usually you see the taxes on irrigated ground in North Dakota are not much because they don't factor in that irrigation system at all.
A good conversation. Again, we appreciate the chance to visit with all you guys, Kyle, Dale, and Nick. Thank you for being with us today, and thanks for all of you for joining us. Again, on behalf of the Red River Farm Network, thanks for joining us. I'm Don Wick on the Red River Farm Network.
To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, MicroEssentials with Fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching. But MicroEssentials is very different. Over time, Microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only Microessentials with Fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.